Congratulations! At exactly 8 o'clock this morning, every central bank on Earth stopped answering to governments. Instead, they answer to you. Nobody knows why. Nobody questions how. Every financial institution, every reserve bank, every monetary committee receives the same order at the exact same second. Effective immediately, all monetary authority belongs to one individual. Your name appears underneath. For 10 seconds, the world is completely silent. Then every stock exchange halts trading. Banks freeze transfers. News channels interrupt their broadcasts. Your phone begins ringing. The first call comes from the president of the world's largest economy. The second comes from another head of state. Then another. Within 5 minutes, every major government wants to know exactly one thing. What are you going to do? Until this morning, interest rates were decided by committees after months of debate. Now, every economy on Earth waits for a single decision. Yours. You arrive at the headquarters of the newly created Global Monetary Authority. The building didn't exist yesterday. Today, it's surrounded by military vehicles, armored convoys, helicopters circling overhead, and enough security to protect a summit of world leaders. Except there aren't 50 world leaders inside. There's only one. You? Inside, hundreds of economists, statisticians, market analysts, and former central bankers stand as you walk through the doors. Nobody applauds. Nobody smiles. They're terrified because they understand something you don't. Money isn't just paper. It's trust. And trust can disappear overnight. Your chief economist slides a tablet across the table. One number fills the screen. $315 trillion. That's the total value of global debt. Governments owe it. Companies owe it. Families owe it. The price of that debt now depends entirely on your decisions. One wrong move doesn't just hurt investors, it changes whether millions of people can afford their mortgage next month. The first briefing lasts all day. You expected charts. Instead, you get warnings. Raise interest rates too much. Businesses stop borrowing. Construction slows. Factories reduce production. Layoffs begin. Lower them too far. People borrow too much. House prices explode. Inflation returns. Savings lose value. Currencies weaken. Neither option is good. Every solution creates another problem. By sunset, you realize something no textbook ever explained. There is no perfect economy, only different kinds of pain. The following morning, you make your first announcement. A modest 0.25% reduction in global benchmark interest rates. Small enough to avoid panic, large enough to encourage growth. For exactly 23 minutes, you're a genius. Markets explode upward. Technology companies gain hundreds of billions in value. Construction firms celebrate. Automakers announce expansion plans. News anchors call your decision the beginning of a new economic era. Financial influencers declare you've solved the economy before lunch. Your approval rating reaches 86%. You haven't even finished your coffee. Then reality catches up. Oil prices begin climbing. Food distributors raise prices. Shipping companies increase freight costs. Within a week, grocery prices edge higher across dozens of countries. The same people celebrating 7 days earlier now ask whether you've reignited inflation. One newspaper prints your face beside a single headline. Too soon? You ignore the criticism until your second briefing. The room is quieter this time. An advisor projects a map onto the wall. Red dots begin appearing. 1, 5, 20. Soon, hundreds cover the screen. Each one represents a protest. Different countries, different languages, the same complaint. People blame you for rising prices. Some carry signs demanding lower inflation. Others demand cheaper mortgages. Some want lower interest rates. Others want them higher. Two crowds stand across the same street shouting opposite things. Both insist you're destroying their future. Your advisor shrugs. They're both right. By the end of the month, your calendar no longer belongs to you. Every hour is booked. One prime minister wants emergency funding after floods destroy half the country's infrastructure. Another wants weaker currency to boost exports. Another argues stronger currency is the only way to stop imported inflation. Each leader arrives with graphs proving they're correct. Each graph contradicts the previous one. Every meeting ends the same way. Governor, the decision is yours. Outside your office, cameras never leave. Reporters track every movement. One afternoon, you pause outside the building to answer a question. Do you think people understand how difficult these choices are? Before you can respond. Breaking news flashes across every network. Markets assume your silence means interest rates are changing. $2 trillion disappears from global stock markets in 9 minutes. You didn't say a single word. You were adjusting your microphone. Your communications director quietly tells you that from now on, every facial expression has economic consequences. 3 months pass. Your approval rating falls below 50%. Not because you've failed, because every family experiences the economy differently. Someone buying their first home wants lower borrowing costs. Someone living on retirement savings wants higher interest rates. Borrowers cheer your announcements. Savers hate them. Investors celebrate. Workers worry. No matter what you choose, half the world feels ignored. Then comes the first real crisis. One of the largest banks on earth announces unexpected losses. Not enough to collapse immediately, enough to frighten everyone. Customers begin withdrawing money. Billions leave within hours. By evening, the line outside every branch stretches around entire city blocks. People don't wait because they know something. They wait because they're afraid everyone else knows something. Fear spreads faster than facts. Your advisors present 2 options: rescue the bank or let it fail. If you rescue it, millions keep access to their savings, but every future bank expects the same protection. If you let it collapse, executives learn consequences. So do ordinary families who trusted them. Neither outcome feels fair, yet waiting isn't an option. Every minute increases panic. You authorize emergency liquidity. The announcement goes live before midnight. Markets open calmer. Customers stop withdrawing cash. The crisis appears over for 48 hours. Then another struggling bank requests identical treatment. Then another. Soon healthy banks begin taking bigger risks. After all, if the global monetary authority always rescues failures, failure becomes less frightening. Your single decision quietly changes the behavior of the entire financial system. Not because people became smarter, because incentives changed. 6 months into the job. You haven't had dinner with a friend once. Not because you're busy, because nobody talks to you normally anymore. Every conversation somehow becomes about mortgages, investments, retirement, business loans, inflation. Someone always wants advice. Someone always wants reassurance. Someone always wants you to fix something. Even birthdays become economic discussions. You miss arguing about movies. You miss talking about sports. You miss conversations that don't move markets. Then something happens that changes everything. It isn't another recession. It isn't another banking crisis. It's much, much bigger. A government secretly begins printing money without your authorization. And by the time you discover it, the damage has already spread across the world. The report lands on your desk at 6:14 a.m. It isn't marked urgent, it's marked confidential. A small nation, buried deep in the global economy, has quietly begun creating money outside the international banking system. At first, it seemed harmless, a temporary solution to pay government workers and keep essential services running. Then, neighboring countries noticed something strange. Their currencies began losing value overnight. Imports became more expensive. Businesses stopped accepting payments from across the border. Within 2 weeks, what started as one country's problem had spread across an entire region. Your advisors don't call it inflation, they call it contagion. Because that's exactly how financial panic behaves. It doesn't stop at borders. You schedule an emergency meeting. Representatives from 40 countries appear on screens surrounding the room. Nobody waits for introductions. Everyone starts talking at once. One finance minister wants sanctions, another demands emergency loans, a third insists the markets should solve the problem naturally. Every minute they argue, another $1 billion leaves the region. Investors aren't waiting for your decision. They're running from uncertainty. You realize something. Money isn't driven by numbers, it's driven by confidence. The moment people lose confidence, the numbers follow. You announce a coordinated rescue package, emergency lending, temporary currency support, strict oversight. The markets respond immediately, currencies stabilize, bond yields fall. News channels call it one of the fastest financial interventions ever attempted. For a moment, it feels like you've prevented disaster. Then your communications director walks into the room. She doesn't say a word. She simply places 3 newspapers on your desk. The first headline reads, "Global Bailout Rewards Bad Behavior." The second, "Taxpayers Will Pay the Price." The third, "Who Gave One Person This Much Power?" Yesterday, you were the hero. Today, you're accused of saving the wrong people. Months pass. Your decisions become routine. Interest rates rise, then fall, markets climb, then correct. Inflation slows, employment weakens. Every improvement comes with another sacrifice. You stop looking at approval ratings. There isn't any point. No policy stays popular for long. Then something unexpected happens. The world's richest people begin requesting private meetings, not together, separately. One arrives in a private jet. Another sails into the harbor aboard a yacht larger than most cruise ships. Another appears without warning. Each meeting begins politely. Each ends the same way. They want certainty. If we knew your next move, we could prepare. Protect our businesses. Avoid unnecessary losses. None of them asks for insider information directly. They don't have to. The implication hangs in the room. One correct prediction could be worth hundreds of billions. You refuse every request. After the 5th meeting, they stop asking. A week later, newspapers begin publishing anonymous stories, questioning your competence. Coincidence? Maybe. Your security chief doesn't think so. He increases your protection. Your office gains another security checkpoint. Your home becomes a restricted zone. The route you drive to work changes every morning. You laugh the first time they suggest using decoy vehicles. Then, protesters block your convoy. Not violently. Just thousands of ordinary people standing in the road. Teachers, truck drivers, parents, students. Some hold signs demanding lower mortgage rates. Others demand cheaper food. A few simply want answers. Your convoy turns around. You spend the afternoon watching them from a helicopter instead. You can see them. They can never see you. The distance between you and everyone else grows a little larger. One evening, you decide to leave the office early. No meetings, no cameras, no speeches, just dinner. Your security team books a small restaurant under a false name. It works. For 23 minutes. Then someone recognizes you. A photo appears online. Within minutes, the restaurant is surrounded. Customers stand to take pictures. Some applaud, others shout. One man walks over and calmly places a mortgage payment on your table. "I just wanted you to see what your decisions look like." Then he walks away. You never finish dinner. That night you can't sleep, so you open the economic dashboard. Thousands of charts glow across your screens. Inflation, employment, consumer confidence, industrial production, trade flows, government borrowing. Every graph represents millions of lives. Every line moving upward helps someone. Every line moving downward hurts someone else. You zoom out. The graphs begin looking less like data, more like heartbeats, the world's financial pulse, and somehow it's connected to you. The next morning, another crisis begins. Not in banks, not in governments, in people. Consumers stop spending, not because they have no money, because they're afraid. Restaurants empty, vacation bookings collapse, new car sales fall. Businesses notice immediately. Hiring freezes, factories reduce production within weeks. The economy begins slowing itself, not through mathematics, through psychology. Fear becomes self-fulfilling. Your advisors explain something called expectations. If people believe tomorrow will be worse, they make tomorrow worse. So you try something different. Instead of changing interest rates, you give a speech. No charts, no statistics, just honesty. You tell the world the economy isn't perfect. It never will be. But panic creates more damage than patience. For a few days, it works. Markets calm. Businesses reopen hiring. Families begin spending again. Confidence starts returning. Then one television commentator says your speech sounded nervous. The clip goes viral. Suddenly, everyone starts asking the same question. What isn't he telling us? Fear returns, not because of your policies, because of your tone of voice. Years pass, the economy grows, then contracts, then grows again. Children who were born on the day you took office are now starting school. To them, the world has always worked this way. One person, one office, one signature controlling the cost of money. They don't know any different. You do. You remember when central banks argued with one another, when no single person carried the weight of every economy. Oddly, you miss disagreement. It meant responsibility was shared. Now every success belongs to everyone else. Every failure belongs to you. Late one evening, your chief economist walks into your office carrying one final report. No graphs, no numbers, just one sentence. The global economy is stable. You smile for the first time in weeks. Then you turn the page. The next sentence changes everything. It is also completely dependent on you. The room falls silent. If you disappear tomorrow, markets won't know what comes next. Governments won't know who decides interest rates. Banks won't know where to borrow during emergencies. Currencies won't know how to respond. You've spent years making the financial system stronger without realizing it. You've also made it rely on a single point of failure. You. For the first time since taking the job, you ask yourself a question no economist ever mentioned. Maybe the greatest measure of power isn't how much you can control. Maybe it's whether the world can function without you. You stand and walk toward the window. Below, millions of lights stretch across the city. Each one belongs to someone with plans. A family saving for a home, a student paying tuition, a retiree protecting a lifetime of work, an entrepreneur chasing an idea. None of them wake up thinking about central banks. They simply want tomorrow to be a little more predictable than today. And perhaps that's what money was always supposed to provide. Not unlimited wealth, not perfect markets, just enough confidence for ordinary people to build ordinary lives. You switch off the lights in your office. Outside, the city keeps moving. The markets will open again in a few hours, and for the first time, you hope they won't need you forever.